Morning traders, Paul here with GammaEdge. Today is Tuesday, the 17th of May. Let's go ahead and get started. Please pause your readers and read to the bottom here, and then when you're done, hit start. Taking a look at the overall index conditions for the SPX, the SPY, the Qs, and IWM, kind of a mixed picture. We saw some short-term puts being closed on the SPX yesterday, but we also saw some short-term calls being closed. The SPY actually saw a net increase in downside protection with no real major change on the call side. The Qs, again, no major change on the call side. We saw some downside protection added, and IWM, the same story, kind of the flat situation there. Taking a look at the expiries here. We're between the goalposts, which is where spot price is between the dominant negative gamma and dominant positive gamma. This exists for the SPX, the SPY, and IWM. Doesn't exist here for the Qs. We had some data queries in here to see if this was actually true. For right now, it does appear that this is a valid. We have very little expiries for tomorrow occurring in the Qs, even though we're sitting there. We will continue to look at the data and see if that's a valid condition. The takeaway here is that as we get closer and closer to the zeros, we're going to be more directionless, kind of just floating around. And as a result of that, expect some whipsaws, expect some reversals. We're really at the mercy of the 0 and 1 DTEs and not really playing on any dealer interaction. They presume they are well hedged into the 0, therefore their delta changes in those situations are going to be minimal, and therefore we're not going to see a lot of movement one way or the other. Taking a look at the gamma history, a couple things are of interest here. First of all, the short-term negative gamma has moved up in alignment right with the price from yesterday. When we see this happen, typically it indicates anticipation of a further decline, and so we're going to want to watch that. We also saw positive gamma going back up here to 450. When we see it move away from spot price, this typically means that we're not anticipating a rally. So together, the SPY is painting a picture of anticipating a downside movement. We don't know the time frame, but these are short-term gamma structures, so I would say within the next week. Here at the Qs, slightly different story. Basically, we had the price close below POI and minus gamma. When we see that, we can generally see a monetization event, which will push us higher. We also have a drop in the call open interest, or COI. That could be due to a couple things, either the closing of the puts at the old level, or closing of calls at the old level, or the addition of calls at the new level. And so we want to pay attention to that. This anticipates a rise, and especially if we get a monetization in this with the positive gamma coming down here, we're going to see some folks being in the money and possibly being able to capture some upside movement here. So this actually is showing some short-term bullishness again on the next week or so. IWM, hard to read, not really any changes here. We had POI drop, which we think is a roll to a lower level. You can see the gamma levels are unchanged. We also got a drop in negative GEX here at the same time. And when that occurs, basically we're not seeing any anticipation of an upside. We may continue to move to the downside. Remember, there's not been any call demand for IWM. It's all been on the put side, and I think that's what we're seeing here. Taking a look at the flows, overall net negative on the SPY. We had puts being added throughout the day. That's the red line here. Over here on the Qs, we actually did see some monetization of the puts earlier in the day, and then as the day wore on, we had puts being added back into the structure. IWM, pretty weak overall, by the way. Just the scales here, you can tell that this is very choppy looking. Although we did see some puts being added into the afternoon. The calls had already been added into the morning, but very, very weak overall. Taking a look at the market model. Improvement in breadth over the last 2 days, no question. So Friday and Monday looking good. This is a lagging indicator. It's just used for confirmation. I cut that off. Sorry about that here. The second trace here is the filtered cumulative tick, and we're not really seeing a lot of participation by the institutions. It was weaker into the close. Some folks have suggested that's a digestion of what happened on Friday. Possibly. You can't read that from this. What I can take away is we still don't have a large upside demand from the institutions. So this signal is not really strong. We are still in a longer-term downtrend, as evidenced by the negative slope on all of the moving averages associated with the cumulative tick, and you can see that we are flat across the open, and we remain flat all day. I call that meh. There's really nothing to read into this except no change, and we were already bearish in general. Now, I know we may open with a gap up this morning, especially with the news out of China, but just be aware we need a upward positive movement sustained over multiple days in order to break this downtrend. I think it's going to be very hard to do. Taking a look at the 0 DTE for today, this indicates that it is the 0 DTE for the 17th. We have a slightly positive expiry. When we see that, we could see some monetization. You can see a little more green here than you see red, giving rise to what you see here at circle 3. We see a major dominant level here at 40.25. If we open above this, you can see that it really opens the path up towards circle 5 here, which is at 4100. Not anticipating a move into the close above 4100. Anything's possible, of course, but it just doesn't seem that there's any pressure here to do so. And remember that the SPX is cash settled. To the downside, we do have a line in the sand right here at 39.80, 39.90. You can see that with this clear transition, negative gamma all the way on down below that, and 3900 into the close. Below that, not likely. If we do pull back, I think we're going to get sticky and bogged down in this area below 39.90, so I'm not too concerned with the downside. The upside does give us some areas that we could actually pause overnight in, and so looking for that. Taking a look at the overall SPX structure, we closed here at 4,008. You can see still very negative gamma overall. We've got some emergence here at 40.55 and 40.60. 4100 is a major line overhead. It's going to be very difficult to plow through that until this clears, and you can see just in the overall net levels of calls, we're just not seeing calls build out in any demand whatsoever. So this is a very difficult structure for bulls to move up through. You can see we've got a lot of negative gamma to plow through. I just don't see us going much higher than 4100, certainly not for today. On the expiration profile, we've actually added to Friday's expiry. We've got a week expiry today, tomorrow, and Thursday. We'll note that the end of the month is growing also. So we come off of Memorial Day right into a growing expiry. Very little showing up in the month of June, and this is the June expiry, which is already a substantial negative amount here. So just keep in mind, we're getting set up. I think we're just drifting into Friday here with a fairly large negative gamma coming off of the charts. Little different presentation here. On the left is the current. You can see all the tiles are turned on. On the right, I've turned off through this Friday. So this gives you the perspective of end of day Friday. What is the difference? I think your eye probably can see, for the most part, not a lot of difference, except that the magnitudes here at circle 2 are substantially different. So we leave Friday still in a very negative gamma. We're not moving to a positive gamma environment in the SPX, even with all the expiries that are coming off this week. 23% predicted on Friday, and then we've got another say 5% going off between now and Friday, or 4%. So basically 27 to 28% of the SPX, several $1 trillion, up to $2 trillion, is changing hands between now and then. Fairly significant. I think in your eye is going to be very good to look at these key levels here. 4100 to the upside remains a key dominant level even after the expiry, and 3900 remains a key dominant level to the downside even after the expiry. So pay attention to these. Obviously, the transitions that we were talking about, we get some of that goes away throughout the week here, and you can see that we've got some emergence of some positive gamma spikes, but very ugly structure to the north even after Friday, and this is going to make progress into a positive gamma environment and a major rally environment. Very, very difficult. So where are we at? So the cumulative gamma wing charts are showing the addition of some short-term puts. So the downside is well hedged. We're well protected. We do not see any severe short-term pullbacks this week. Even after the expiry, we're still going to be in that negative gamma. Still will have volatility, but major downside moves are probably well hedged, and the monetization of those profits will keep us from collapsing. The expiries are more or less weak. We're between the goalposts and near the transition zeros. And what that means for us is that the deltas are well hedged, right? So the moneyness is not changing the directionality on deltas. And as a result of that, we don't see any major changes or major participation from the dealers. As a result, time decay, theta, is reducing the values of those long puts. And as that happens, we get the dealers will buy to cover, and we're also seeing a drop in volatility. With this drop in volatility, IV drops, and when IV drops, Vega drops, the cost of the puts decreases, or the value of the puts decrease, and that too forces the dealers to buy, cover the shorts. And this is a Vanna and charm type of behavior, third order or second order Greek behavior. Our bias is upward into OPEX in a grind type of manner, no aggressiveness. We see little pressure to move either direction, although remember, we're in a negative gamma environment. Volatility is higher. I think we're tracking at over 3%, open, high, low, close possibilities today. But just be aware, in general, we think we're going to grind higher into OPEX, which is this Friday. So that's it for today. If you like today's content, please join us at GammaEdge.us. 14-day free trial, no risk to you. Come on in, kick the tires, meet the traders and investors, and learn how to apply this to your style. Follow us on Twitter, please, at GammaEdges with an S. And then here on YouTube, if you like today's presentation, hit that like button, please. It helps us a lot. And follow us so that you get notified next time that we post content. So that's it for today. Make it a great Tuesday. See you in the Discord, and we'll go from there. Thanks, everyone.